The New Zealand versus US dollar has seen up and down and now back up again. Price action in trading here today. I'll talk about the technicals that are driving this currency pair because they're quite interesting. So let's get started. I just taking a look at the longer term view, taking a look at the 4-hour chart. And if you go back to September to the month of February, the price is still well below the 38.2% retracement. We're also below this falling 100-day moving average back here. And maybe even a swing area right through here near the 0.5796 level. Those levels come in at 9.6, they come at 58.04, and they come at 0.584448. So with the price currently down here near 0.5749 or thereabouts, we're still a long way. Still got room to roam, if you will, up to those levels, up to the 0.5845 level to show that the buyers mean more business after this trend move to the downside. Now let's take a look at the hourly chart to kind of dig in to see some of the technicals more in play. And if we look at a couple of these moving averages, what sticks out to me is in trading last week, we did bounce off the 200-hour moving average. We then came into this swing area and bounced in that area right through here. And then we moved above the 100-hour moving average here. This is all the last move to the upside after, basing on, well, I guess Wednesday's trade. This is Thursday, and Friday we moved out to a new high near the 0.57716 level and backed off into the close. And trading here today, in the Asian session, we went up to test that old high up here at 0.57716 and found willing sellers. So we have a ceiling in place, and that's for sure, and something that we'd have to get to and through in order to increase the bullish bias. Now, on the move to the downside in trading here today, where did we find support? Well, we found support once again against the 100-hour moving average. That's a blue line in this chart, and we've seen a little bit modest bounce to the upside. So 200-hour moving average, swing area, 100-hour moving average, 100-hour moving average. We're progressively trying to go higher, and the question comes: can we stay above the 100-hour moving average, or do we fall below it and then fall below the 200-hour moving average? In which case, we open up the door for just to retrace what those levels were that held support. So that's going to be the key question, not only today but going forward. Watch the 100-hour moving average. That's clue number one. Now on the top side, we need to keep the momentum going in that direction, and in order to do that, we need to get above this high price that we saw in trading last week toward the beginning of the week at 0.5749. Get above that level, and it should open the door for another retest of our high price, our double high up here that came in at 0.57716. From that point, if we do extend above that level, then we can go back to the 4-hour chart and look at other target levels, including, once again, this 0.5796 level, which was a swing low and sort of a swing area through here before moving to the downside. More importantly, the falling 100-day moving average at 0.58046. Get above the 100-day moving average, which hasn't been done since going back to this day right here in October of 2024. So that would be a key move to the upside for the New Zealand versus US dollar, show that the buyers remain in control. So that's my technical view and why I look at those levels. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.